Michael Kors down 7% in the past month. Citigroup, though, says this thinks the sell-off represents a buying opportunity. Who wants this one? They say the pattern of beat and raise in recent quarters has been impressive. The business turnaround is progressing well. It's our call of the day. $79 price target, stock's at 67. Who wants it?
I could see that trending in that direction. The stock is having a turnaround. They're making acquisitions, though, and they're turning it around. They're trying to attract a different customer base. So they acquired Jimmy Choo. They acquired Versace in the past couple of weeks. So the two of those M&A transactions are kind of transforming the customer that they're targeting. And listen, this has been a turnaround story since the early part of 2017. They're doing a nice job with it. 67 today, 79. I could see it in a strong market.
You know, they sold it off because of the Versace buy, right? Everybody said it was overpriced. The reality, I think, is it actually opens them up in the accessory world, and that actually could be something very good, including on the margin side, Scott. So this is a company. You know what? You get tired of the companies that are out there that are just going with the status quo, and they're saying, you know what? We're just kind of humming along here, and we're not going to do anything. I think this shows you that this is a company that's actually willing to go out there and look for other ways that they can add to their brand now. And I think that's what they did. And obviously, the analyst is looking at this saying, hey, look, my price target's the same. Stock pulled back because of this acquisition. This is a great opportunity to buy. It makes a lot of sense.
All right, so good opportunity to talk about retail. XRT had its worst daily performance since December of 2016, yesterday. Okay, now maybe that was due to Amazon raising the minimum wage and some of the stocks falling back as a result of that. And there were some big, unbelievable. Well, Stitch was down 35%. Ascena was down 8, Penny's down 8, Express 7, Wayfair 6, American Eagle 6, Gap 5. That's justified because of Amazon minimum wage raise?
I think it is actually because it does raise costs.
This was a winning trade.
However, I don't think that everybody follows Amazon. It's a completely different employer. I mean, right now, you're in a full employment, world, so you've got to pay up for workers anyway.
So is this trade now done? Right? Retail was written off.
They're winners and losers.
Retail had a great comeback. Now retail got upset yesterday.
Right. I sold Adidas because I ran into one of the top managers for Nike in Europe, and he said Adidas is losing some mojo in Europe. And as I went,
that's all it took?
No.
What did you expect him to say?
Let me finish. Oh, no.
I just love that he ran into him on his European vacation.
This guy I met
twice with the Adidas guy.
I met this guy from Nike, and he said Adidas was terrible.
What if he really wasn't? He was just BSing you, man.
That's not what he said. It's not what he said. First of all, I think I could trust the guy after knowing him for half an hour. But no.
With his investments.
I was worried about Adidas anyway with Nike's strides after Nike's call. And I went back through the Adidas financials. I went back through their presentation. And look, their entire business, every market except for Asia-Pac, which is China, that was up 27% for the first half of the year, and the U.S., that was up 15%, has been flat or down, including Europe. So it's going to get worse. They lowered their forecast versus the first half of the year, up 10 to 12%. So I thought that was a lot to pay for Adidas stock. That's why I sold it. So he triggered it. It usually takes me an hour to get to know somebody.
Thank you for the clarification. I was like, if that's all it takes.
And you're through World Cup also.
So I think this is way too much.
It takes less than that. I've listened to his Pete on it.
Can you let Aaron talk?
I think it's an overreaction. Remember, Target and Walmart have already signaled that they're going to move wages up to $15 an hour by December 2020. So this is not news in the sense that they're a leader in terms of this. When you look at the impact to average hourly earnings on a macro basis, it's only 0.1%, if that, to average hourly earnings. So again, not a big impact. I think that you've had a really nice run. You've seen a little bit of a leadership transition now with some of the more CapEx-centric names taking more of a leadership role in the market. I think it has more to do with just a general rotation and a little bit of selling. But I don't think we're done with this consumer cyclical trade. I still like the consumer discretionary.
I'd like Target to come down more. I'd like to buy more.
That's a quality name, though. I think a lot of
it is, isn't it?
I think what's happened in retail is there's been a comfort on the part of the investor that maybe we were not going to return to the 16 environment where you had a lot of the names that were highly levered experience a lot of volatility. And I think what happened yesterday, in particular with Stitch Fitch, falling 35%. Stick Fitch. I don't even know. So that falls 35% yesterday, falls again 2% today. And I think that takes a lot of that type of positive sentiment out of the retail names where investors were coming in and they were looking at names that maybe didn't have the qualitative balance sheets that a Walmart or a Target or some of those retail names would have. And I think that's kind of cooling a little bit the fever that was in the retail environment.
Stitch Fix is such a unique concept and a unique company that I don't really think it plays into retail.
Agreed.
Wayfair, as you mentioned, has been a rocket ship and is so heavily shorted because they don't make money, but I think it's, it's a battleground stock. In terms of the others, J.C. Penney, look, that company may not exist, going forward. The others, it's situational.